Hey traders! In this video, I'm going to show you one of the easiest ways to trade binary options. We'll break down how to find key levels in the market, use support and resistance like a pro, and spot high-probability setups. So make sure you watch until the end. You don't want to miss this. Today I'll be using Pocket Option, one of the most popular binary options platforms available in over 95 countries. It offers a free demo account for practicing strategies, risk-free, and a variety of assets like Forex, commodities, stocks, and cryptocurrencies. I'll have a link to sign up for free in the description. And when you sign up using my link, you'll get a 60% deposit bonus with a promo code to boost your trading funds. Alright, we're going to jump onto the charts and look for some key support and resistance zones, then mark them out together. Resistance is an area where price was going up, hit a certain level, and then got rejected. That's where sellers step in and push the price back down. Support is the opposite. It's when price breaks out to the upside, then pulls back down and finds a level where it holds. That level becomes support, where buyers step in and push price back up. These key areas are where price tends to bounce, so spotting them is crucial for finding good trade setups. Here, I've marked up some support and resistance levels on the 1-minute time frame. This helps give us a quick snapshot of how price has been moving, where it's been rejecting or bouncing, so we can get an idea of what the market might do next. Now, let's switch to a higher time frame to mark out the more significant support and resistance zones. These higher time frame levels tend to be stronger and more respected, which can help us make better decisions when we drop back down to lower time frames for entries. I like to include the wicks of the candles when marking support and resistance zones. The longer the wick, the stronger the rejection from that area. It's a sign that price tried to push through but got stopped hard. In this example, it looks like we're trading inside a range, but we're also seeing multiple rejections from both the top and bottom of that range. That's actually a good thing for us, especially since we're using 1-minute expiration times. It creates a lot of short-term trading opportunities. Now, if we zoom in on the 1-minute time frame, we can see exactly how price reacted to these zones. This gives us a clear picture of market behavior and helps us anticipate where price might move next. If you're finding this helpful, don't forget to hit that like button, drop a comment, and subscribe to the channel for more trading tips and strategies. Now let's jump over to the 15-minute chart. I've marked out some key rejection zones based on a trade I just took. I'm using the wicks from previous candles as potential rejection points. These are areas where price previously struggled to push through, so I'm expecting a possible reversal when price comes back to those zones. Here's the trade I just entered. With this strategy, you can mark as many zones as you want, especially where you think you'll get the strongest reaction. Just make sure they're clear and respected areas. I'm also using my 4-entry rule with this setup. That means if the first trade loses, I increase my trade amount on the next one to cover the loss and still secure a profit. If all 4 entries fail, I take the loss and move on. No chasing. One key thing to remember, wait for price to actually hit your zone before entering the trade. Sometimes price won't quite reach your level, and that's okay. Be patient and wait for the best price. Also, on my 3rd and 4th entries, I'll often increase the expiration time to 2 minutes if I feel like price is still moving in my direction, but just needs a little more time to play out. I also like to use indicators with this strategy. Things like the 200 EMA, Keltner channel, RSI, and the stochastic oscillator. But for this video, I just wanted to show you how simple this strategy can be, even with just boxes and lines on your chart. If you want to see how I use those indicators alongside this setup, I'll link a video in the card above where I break that down with some live trades. Now, I'm currently using this strategy on the OTC market, which can be more volatile, but the strategy works on both OTC and real market pairs. The key is to find a clean chart that's respecting your zones and giving you clear rejections. And probably the most important part of all this is risk management. Know your limits, stick to your plan, and always know when to walk away from the chart, whether you're up or down. I went ahead and sped up the footage 2x since I had to make multiple entries for this setup. And honestly, that's just how trading goes sometimes. You might need to go all the way to the 4th entry, but that's why practice and understanding price action is so important. Once you really start to read what the market is showing you, you can trade with more confidence and trust your analysis, even when things don't play out perfectly right away. And if you want to see full trading session of me using this strategy, feel free to check out my other videos. That's going to be it for this video. If you have any questions, feel free to drop them in the comments. I'm always happy to help out. If you enjoyed this content, don't forget to like the video, and I'll see you all in the next one.